Let's get more on the US and the markets there, sentiment, the economy, etc. Dorland is with us, Chairman and Chief Investment Officer at Lander and Fust Capital Markets. Dodge, good to see you. The big story is going to be the payrolls next week. How are you positioned ahead of that print?
The market is assuming that employment is going to be better. Unemployment is going to be better than expected, so we're hoping that the numbers are going to be positive relative to what is expected. We're positioned on the wait and see. We have no short positions. We're long the market, but not totally invested. And right now, even though the GDP was not so good for the first quarter, the market is overlooking that and really looking more at the actual earnings progress that we had for the first quarter.
And added to that, Dodge, we are seeing more M&A deal flow. How much of a positive sign is that of economic confidence returning and also companies more willing to deploy the cash that they are sitting on their balance sheets?
Well, Sri, right now I think a lot of the demand for IPOs, for mergers and acquisitions, for new capital coming into corporate sector is based on low interest rates, and they hope that after 5.5 years of really stagnant growth that we're going to start to pick up. But that hasn't happened yet. Growth, as you saw in the first quarter, was unexpected, but it was weather related. There's a rationale for expectations to have growth continue. While interest rates are lower, it does make M&A much easier. So I think part of it is based on low interest rates. Now, what we really need to see is growth. That will make IPOs. That will make the economy support the IPOs and the mergers and acquisitions that we're seeing right now. But that remains to be seen.
Strategically, Dodge, you like the airline sector. Can you explain to me why? Because we are starting to see the price of oil creep higher. That's going to have a knock-on effect on jet fuel, big input cost for those carriers. Why so optimistic on the sector?
You're absolutely correct. We are, from a fundamental point of view, there is a question as to what the future growth is for airlines, but from a technical point of view, airlines are part of the sector rotation that we're seeing. Airlines have been on a run. They've been consolidating recently. The expectation that the price of gas and oil and all the fuels that are needed for airlines will stay in a relatively narrow band, and that will not affect the longer-term growth of their earnings. So we're seeing a rotation back into airlines. We're seeing it in some of the, like auto parts, not the autos themselves, but the auto parts, the auto-related sectors. We're seeing some rotation back into these areas, and we suspect that there will be a rotation out. But for airlines, we're seeing more of a consolidation as opposed to a significant pullback.
And one of your top picks is Dow Chemical, as well as Tenneco and Magna International, Dodge. Tell us why. I mean, Dow in particular, yes. Is that a call on the lower price of gas as an input cost because of the shale boom?
Yes.
That's going to be a big tailwind for the likes of Dow.
Exactly, Sri, and that's why we're positive about it. We are looking to get involved with Dow, both on a personal basis and also for our clients. We suspect that this is a longer-term play, so we're beginning to see some longer-term opportunities as opposed to the shorter-term opportunities that are coming up because of market volatility, which has basically died down. Dow is much more of a longer term. It's also a big cap type stock, which we're beginning to see more of a confidence in terms of investing longer term.
Dodge, noted. Thank you very much indeed for that, sir. Always a pleasure talking to you. Dodge Dorland there from Lander and Fust Capital Management.